Happy Friday, everyone, and thanks for joining today. It's 8 a.m. Chicago time, 9 a.m. Eastern, on the Friday of the 11th of August, 2017. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning is getting off the bottoms a little bit. It's not really had any recovery yet. We did extend the auction down as expected overnight. Why is that expected? I'll go over that in a bit. But this morning, the Euro stocks are the laggard again. 34.10 is where they're trading, down 16 points or down 0.47%. The euro is strong, the Japanese yen is strong, the Bund is also strong. Those are the three leaders on my board. The U.S. equities are gaining slightly, somewhere in the 13 basis points or so, like that, or so. It's 0.13 or 0.14%. But overall, the market's has been resting overnight. Just a quick reminder, today's Friday. It is like Friday. Please hit the like button, the thumbs up button on the broadcast, wherever you see it. So if you don't see it on your screen because you're streaming through a website, just hit the YouTube button and please hit the like button. If you're watching it through somewhere else, please find my page, find the video, and hit the like button. A little bit of effort goes a long way. I'd appreciate that. As far as news flow overnight, it's been pretty light, but the fact is the S&P 500 cash index has fallen 1.45% on Thursday, making for the biggest one-day drop since May 17th. It's been a dry spell for almost 3 months for the S&P. This is the first time in 16 sessions that it did not close within a 0.3% move of its previous day's close. That's how tight the market has been. Volatility, the VIX has crawled off the bottom. The VIX put in a low print of, get this, 8.84 on the VIX. It's currently trading double that at 16. About double that at 16. The VIX has jumped quite a bit with the market movement. It's nice to see a market make a comeback, and I'll show you in a minute how a market that is free to trade, that is auctioning properly, how it treats the volume profile levels. We'll get to see that in a moment. The odds of a Fed rate hike are dropping again. The market's pricing in at just a 33.6% chance the Fed will raise its benchmark interest rates before the end of the year. This is based on data from Bloomberg, and also the IEA raises forecasts for world crude oil demand, but crude has fallen off yesterday. It attempted to test the upper side of the high volume node, the composite high volume node I talked about, and has moved back below it. I'm bearish on crude despite the movement up over the last few days. I'm looking to press the short side more than long side currently. Remember, bearish, bullish, when you hear someone talking about bearish or bullish, you want to make sure you understand their time frame, and my time frame is day. I trade intraday. I don't carry anything overnight. I don't swing trade futures. So that's the perspective I'm coming from. As far as other news flow overnight, there's nothing. We did get a report from NVIDIA, the technology company. They beat by far. They reported $1 versus 69 cents, revenues of $2.23 billion versus $1.95 billion. NVIDIA is my favorite GPU or graphics card company, so I'm very happy about that. I've owned those shares for a long time. Anyway, so let's switch gears and look at what we expected yesterday. So way off base yesterday. There's no way to predict that the market's likely to have a large move down. Yesterday, I did expect, as I outlined here, I did expect a test lower. So I expect this move to continue lower before it starts to correct. This is based on how the market's been behaving how the market's been behaving, for the last few months. So that's all the information I could go on. Remember, my job is not to get a feeling or to listen to what others say and predict. My job is to take it's almost like Newton's laws of motion, right? An object in motion will remain in motion until something acts on it. And so, to me, I just go in a linear fashion in a way that I look at the market in the context, unless there's something exerted on the auction that changes it, in which case I immediately change my view. So, with the way the market has been trading, I've consistently looked for the market to test below. So you can look at that for yourself. You can see how we test the prior day, even on sell-offs, we test the prior day, and we immediately find buyers back into the value range. And that's where I came up with this this level. That level makes up the value area. That's the gray area of the profile. The gray area of the profile is the value area. And so the idea is the market tests value low, right here, this gray, tests value low, pushes down outside of the range, and then we get an impulse up, a higher low, an impulse up, and then it tests through the point of control to the other side of value. That's where Hypo 1 comes from. There's a logic behind what I'm saying. It is not just random. And if you go back to these videos from 3 or 4 years ago, it's the same process, and guess what? It's been the same process since about 2005. Same thing, and I'm still here. So the secondary hypothesis is the market's unable to find its buyers. We did expect a responsive move initially because of the overnight inventory being short. We expect that to balance somewhat. Remember, the day before we finished up here, so the overnight inventory is short because we're opening down here. So there's a deficit between where we were before and where we are now. So we expect the market to correct that somewhat. Why does it correct it? I could talk about that for a long time. I won't. But to keep it very simple, imagine you were short and you were right in the overnight trade. You were short, you put on a short, and you went away. You woke up today, and then you came into the market, and you saw your short was in the money. What is the first plan of action? The first plan of action you'll take is to secure your risk. So you'll take some profit. If you're going to take some profit, you're likely to buy, and therefore you're one participant in the responsive buying, and that's why the overnight inventory is important to track. And that's why we expect the market to respond somewhat. How much it responds depends on how much off balance we are, and it's hard to quantify that. So I'm not looking for anything big. I'm just looking for a response to sell into in the direction of the trend, and that's what Hypo 2 is for. It responds, it consolidates, it attempts to push higher, goes to value high again, and then starts to find sellers for the rotation down to 24.50, which was the key target yesterday. The market ended up going to 24.35.50, and that's a huge level for us, by the way, and I'll show you why. Here's what actually happened. Notice this is a two-tick Renko chart, and it's filling up the entire screen. And I even have it squished. Normally my screen is this, has this zoom in it, and we're way off screen. Now we're talking about a market that is moving, right? Because that's why I use a Renko chart versus a time-based chart. A Renko chart indicates to me when the market is actually moving versus when it's stagnant, because these bars don't form unless there have been moves. So there's your responsive buying right there on the open. Beautiful opening swing. Yesterday's opening swing is just beautifully done. It is very clear. We see the high and low of the early participants very early, and it's clear that the market, once we get this impulse down, so we first get this impulse down at 6.75, and now we're looking for the pullback. For the continuation, pull back to the continuation. I'm going to have to zoom in here, and I'm just showing you what I've been talking about this whole time and what I consistently talk about in my webinars here at work. So we get the impulse down, so we expect the continuation. Where do we expect the continuation from? We expect the continuation from the midpoint of the move or better. And what it does is it has a continuation, and then we push to the mid. The mid now is in line with the opening swing low, with the prior day's low, with the mid of the session, with VWAP. That is a setup, folks. That's what a setup looks like. It pushes through by a tick, and then explosive move down, 7.25. What do we expect next? I expected this to fail and push higher. But then again, I still have to take this setup, right? So my expectations don't really matter. I have to take what's in front of me. I expected this to put in, to test, put in a higher low, and then get an impulse up, and that would give us hypo 1. That didn't happen, okay? What we got instead is an impulse down. Beautiful trade. An impulse down. What do we expect next? We expect it to pull back somewhere less than 50% of this swing for the continuation move, which is what happens. The pullback is very, very brief. It's only 7 ticks. And then we push down into our main target, 2450. That is the projected weekly range. And then it pushes through to 49 by four ticks, just 4 ticks. Consolidates, starts to put in a base, higher low, impulse higher, back, and then we have a continuation move into the mid. Another beautiful setup. So we want the impulse and take the continuation fade into the mid for another rotation down. How much am I expecting on a rotation down? Just 3 points. Just 3 points. If it goes beyond 3 points, that is beautiful. That is just gravy, right? But I'm looking for 3 points on the move. It starts to rotate down, 4.75 points, pulls back to the midpoint of this last move, and then we get a continuation, and it's just beautiful. The auction just finally operating properly. Where do we end up? We end up at 35.50. We get down to 35.75 on the low. What's there? It's the MC point of control from our huge area, and it's a key reversal zone as noted by the flex levels. For those of you who have flex levels, you probably had this note on here for at least a couple of weeks, if not longer, that this is a key area at 35.50. Where's the key area coming from? I know I'm spending a lot of time on this recap, but something happened finally, and so we can talk about it. So actually on the daily it'll show up better. Let's look at the daily for a minute. Here's where that level comes from. Look at that beauty. It is the point of control of the next balance zone, which is here. This is the balance zone that we came out of in May. So from the beginning of May till the end of July, this is where we were. The most important level, the point of control of this balance zone is 35.50. Where do we stop? 35.75 yesterday. That is not a coincidence. By the way, disclaimer, they don't always happen so perfectly. Okay, so I'm not trying to cherry pick here. I'm simply telling you that once the auction moves out of balance, which is what we had up here, we had balance, we had this horrible trade. Once it moves out of balance, it is likely to test the next balance zone, which is this area, this box, this whole area, and then it's likely to move. In order to test the balance zone, it is likely to move to the point of control of the balance zone. Boom. That's what we did yesterday. A 25 plus point move stops 1 tick ahead of the MC point of control. That is what volume profiling is about. We had the most participation here. You can see how it perks up right here in the profile. We had the most participation here through the months of May through the end of July. So basically 3 months of trading occurred in this balance zone. We tested it. The next behavior is to get tangled. For anybody that's watched the webinar series on my website, we're likely to tangle in the MC point of control, and then we're likely to test back up and move up into the value high of that MC if it cannot get out of. It's kind of like a rocket getting out of orbit, out of Earth's orbit. You have to have a lot of energy to get out of Earth's orbit, but once you get through the Earth's gravitational pull, it's now floating in space, right? It's easier for it to move up. And that would be the value high. Once we clear that orbit, Now we're likely to push into the MC point of control of the upper balance, and then the new all-time highs are in play. This is how the auction works, and you're seeing it unfold right in front of you. And so, if it does not clear Earth's orbit or this profile's orbit, if it pushes back up towards the 5150 or the 50 area is unable, then what do we expect? We expect the next low volume node, which is down here. The next low volume node is at 2402. That would be the target going down on a swing basis. So if you're trading weekly options or whatever, that's your next cutoff point. If it's unable to clear 2451.50, that would be the next rotation down. And once it gets down here, we expect a bounce, we expect a test, we expect it to potentially fill this area, and then we have to wait and see where the energy goes. If the energy clears that low volume node, then we look for the next high volume node right down here, and repeat, rinse and repeat, rinse. That is the auction market as it operates. Okay? Anyway, I've spent a ton of time on this. Was not intended, but it's just so important to finally be able to take something that's so theoretical unless you see it, and to finally see it so that it sinks in a little bit better. Let's look at what we've done for the week. Just a beauty, right? We've had higher lows, so we're one time framing up. We've got compression here, right? Well, I've talked about this, that we keep putting in one time framing up. We're compressing really hard. We went into this week. If you want to watch Monday's Trader Bite, I talked about how this is compressing, and compression leads to that's balance that's compressed. The compression will likely lead to imbalance. And so I talked about the fact that we're expecting a strong move out of here, probably to the upsides, what I said, because I have no other information to tell me that something changes. I have no idea that we're going to end up threatening North Korea, and they'll end up threatening Guam, and so on and so forth. But in either case, it doesn't. Does the news matter? Yes, it matters, because we know that what is driving the market. Is it the auction or is it the news? So the news feeds for me for the last 17 years of trading have been very, very important. But here's what we gather from the auction. What we gather from the auction is it's loaded. This bomb is loaded. The fuse is lit. We don't know how it's going to explode, which way it's going to go, but we know it's there. We know the energy's there. So we dissipate that energy downwards. Okay, so we get this bearish engulfing weekly. This is what we've done for the week. Let's look at it on a daily basis. We attempted to the high side, and remember when we came in on Wednesday morning, I said we've put in a good high, the best high I've seen probably all year. On Tuesday, that we had somewhat of an excess high. It's not a perfect excess high. It's not a strong rejection of the high, but that high is likely to stay for a while. At least I said at least a week or two, that high is likely to be there. Okay, and then from there we continue down, and we get the continuation move. This continuation move ends up being another impulse right here, and then we're going through the continuation now against the MC point of control. Right here at 35.50, this is where the market starts to balance and then decide, are we going up, are we going down, and that's what we're waiting for next. And I'm doing this on an intraday basis because I don't want to take a position on a swing. It's not my cup of tea. But the information can be used the same way. It can be used to trade options. Again, it's not suitable for all investors, but those are other ways you can manage risk by using options, call options, or by buying options to control your risk and still use leverage. Note the gap zone beneath us right here. Right, let me turn on the flex levels here. So we got this gap zone. We're about to kick into the gap zone here. We're likely to tangle with the gap mid and then sit here a while if we push through. That's how things are shaping up. Anyway, I'm way over my time. I'm going to get into what we need to do today. Oh, by the way, here's what we did overnight. So to carry the story forward into what's happened in the overnight session, we reopen, consolidate, 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 consolidate. We finally test lower, right? Get a clear Nice test lower, 7.25 points. We've got range overnight, and look at the volume overnight, 422,000, 4 times what we've been getting lately. So participants are having to move their positions in and out of the market. That is good for day traders, right? So we've got good range. We've got a good test down. The market retests again, puts in a lower low, and then we get an impulse up. This low is likely in for the time being on volume. So we're moving in a B shape. So this morning we put in a B, which is a long indication of long liquidation early. But is it? No, it's not, because the B started lower and is going higher. This is not a long liquidation profile. It is not. It's a long liquidation profile is if we open, drop, and then consolidate. That's a long liquidation profile. A lot of people mistake that. A long liquidation profile goes from the top and then balances. It is not a long liquidation profile if it balances and then goes up top. So these are longs accumulating here. This low is secure for the time being. Look at where the low is. Gap mid. Gap mid. It's just so important. The simple concept of keeping track of the mid of swings, the mid of the day, the mid of gap zones. Very important as far as I can tell. It is very it is statistically significant, so to speak, to keep track of where that is and measure the market's movement against it. So that's what we've done. We've pushed up pretty good in the most recent part of the session, and so we have inventory that is long, and then initially we're back in a range. We're likely to have an open auction. The open auction today is likely to be wide. Pull back. I expect buyers to step in against yesterday's mid and point of control, and then I expect us to start exploring higher. Initial target is right up here, the first high volume node, break the overnight high, consolidate, and then it's likely to go sideways from there. I expect the market to recover a little bit today and hold sideways. That's why, because we're Friday. We're in a summer Friday. We're opening in range. The market's already extended itself for 3 days. Lower. It is against the MC point of control. It put in a pretty decent low in the overnight session. It's got pretty good support below it. Not great, pretty good. There's good volume in the overnight session. I mean, the overnight session's volume is almost half of a normal day session. So that volume is now significant. That auction is now significant, and so I expect a rotation up and a consolidation into above this low volume node. I expect the market to resist this low volume node at the beginning. So chop, 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 test lower, impulse up, continue higher, get to the high volume node up here, and then go sideways into the afternoon on Friday. Okay, secondary hypothesis. We get an impulse up on a continuation. We push to that high, and then we get below the low volume node, test the low volume node. So now we have a failed attempt at the high, continue lower, and extend this profile down. Why would I expect it to extend this profile down? Look at the volume that went off down here. The point of control is right against the low. This is a very weak low. And a lot of volume went off at the low yesterday. So a lot of hedges coming in, and I expect it to tap into this gap zone and come back up and finish higher on the day. Not higher for the day, but in the middle, higher from the low from yesterday's close on the day today. So back where it opened today. That's hypo 2. Today, creates a good opportunity or probability for hypo 3 or 4 to kick in. Those are open test drive or open drive type of environments. I won't cover it here, but I'll leave you with that. Now, please take a moment and hit the like button on the video before you leave. Enjoy your Friday. Remember, it's like Friday. Do me the favor. Enjoy your Friday. Don't have the market excite you too much. It's nice to see that things are moving around, but don't get so excited that you're throwing away 30% of your account on a trade that's not working. Be responsive. The opportunity's there. The volatility's there. Be responsive with your losses. Get rid of your losses so you can get on the other side. There isn't a better education than to take a loss while you're in a trade. It's telling you that something's wrong. You're getting a front seat to the action. So use it in your favor. Don't hang on, let it go and turn around. Good luck, and I'll catch you on Monday. Take care.